Have you ever wondered how to make your money work for you? It's a question that has crossed the minds of both the young and the old, the rich and the poor, the spendthrift and the miser. You work tirelessly for your money, often at jobs that demand much and offer little. But perhaps exists a way for your hard-earned money to toil away for you in return, creating a symbiotic relationship where the fruits of labor are shared equally. Today, we're delving deep into the seemingly chaotic yet fascinating world of a world that holds the potential to change lives. We're going to focus our attention on those companies that have proven to be consistently reliable and successful over time. These are the corporations that have shown resilience, adaptability, and unyielding determination in the face of challenges and have come out victorious. In this exploration, imagine a world where your dollars are like tiny, diligent employees, laboring away tirelessly under your command. They wake up every day, ready to earn more for you, their effort reflecting in the growing numbers in your bank account. This might seem like an abstract concept or fantasy, but allow me to assure you that it is the very embodiment of the reality of the million-dollar question that has probably started to form in your minds is, where should these diligent, hardworking dollars be directed? Where should they be deployed so they can yield the best possible returns? The answer is simple, yet profound. You can consider the corporate giants, the titans of industry that have weathered economic storms, endured market crashes, and yet have emerged stronger, their foundations unshaken. Think about companies like Apple, Microsoft, Amazon, the behemoths of the corporate world. These are organizations that have not just survived, but thrived in the face of adversity, in a rapidly changing and immensely competitive world. They have demonstrated time and again their ability to innovate, to adapt, and to dominate their respective markets. Investing in such companies is like planting a seed in fertile soil. It may seem insignificant at first, a tiny speck in a world so vast. However, with patience, care, and the right environmental conditions, it will grow. It will sprout. It will branch out. It will bear fruit. It will create a legacy that stands. The test of this journey is not about quick wins or overnight success. It's not about striking gold with your first dig. Instead, it's about long-term growth, about creating a foundation that's robust, that can weather the storms. It's about crafting a financial future that's not just secure, but prosperous. A future where your money, your hard-earned dollars, are not just lying idle, but are working for you. This isn't about quick wins or overnight success. It's about long-term growth, about creating a financial future that's secure and prosperous. But remember, even the most fertile soil can become exhausted if the same crop is planted year after year. This is a simple concept that is a vital part of understanding the ecosystem and the way nature works. When you keep planting the same plant over and over again, the nutrients that particular plant needs get depleted from the soil. Time. The earth is unable to provide for the plant, and its growth diminishes. This is a natural phenomenon that can be avoided through crop rotation, where different crops are planted in sequence to maintain soil health. Now, imagine this principle applied to your financial investments. You would not want to keep investing in the same sector or company year after year. Otherwise, your financial growth could become stunted. or worse, you could experience severe losses. This is where diversification plays an essential role. Diversification is a key aspect of prudent investment strategies. It's the practice of spreading your investments across a variety of different sectors, companies, and even types of investments, such as stocks, bonds, and real estate. The primary purpose is to reduce risk. You see, not all sectors or companies perform well at the same time. Some may do well when others are struggling. Therefore, by diversifying your portfolio, you can mitigate the risk of severe losses by ensuring that you have investments in sectors that are performing well. Consider this: when an apple tree is hit a disease, it doesn't mean all apple trees will be affected. Similarly, a single industry or company's downfall does not mean the entire market will crash. This is the philosophy behind diversification. It helps create a well-balanced portfolio that is capable of weathering the ups and downs of the market. Now, let's talk about another interesting concept in the world of investments: stock splits. A stock split is a strategic decision made by a company's board of directors. They increase the number of shares that are outstanding by issuing more to their current shareholders. The primary intention is to enhance the stock's liquidity in the market. This can potentially lead to an increase in the stock's demand and ultimately its price. Consider the case of stable companies like Apple, Microsoft, and Amazon. They have implemented stock splits in the past, which has brought added value to their shareholders. When a company performs a stock split, it can make its shares more affordable to a wider range of investors. This can increase the company's shareholder base and potentially its stock price. It's another way stable companies like Apple, Microsoft, and Amazon can bring added value to your investment portfolio. So, to sum it all up, making your money work for you involves investing in stable companies, diversifying your portfolio, and capitalizing on events like stock splits. But remember, all investments carry some level of risk. So it's crucial to do your research and consider seeking advice from financial professionals. In the end, the goal is to create a future where you're not just surviving, but thriving, where your money is your employee, diligently working to grow your wealth. And with the right investments, that future is within your grasp.